the Mortgage Guy here with some exciting news for a lot of people who may be eligible for this new refinance option aimed at low-income borrowers. Over the past 18 months, with rates at historic lows, tons and tons of people have been able to benefit from refinance. They're saving thousands of dollars per year, hundreds of dollars per month on their mortgages. And really the only people that have been left out in the cold are the people that probably need it the most. The people with lower incomes, lower credit score, who were unable to qualify, right? And they couldn't get a refinance, even though they saw really the wealthier borrowers, the more qualified borrowers were out there getting the very best mortgage terms when, if you look at it, let's be honest, right? Sorry to all the wealthy folks watching, but you don't need to save $250 a month as much as somebody who's on a tighter budget, who's making less money per month, per year, right? And so this is a really great thing. I like what I see so far. We'll see how it rolls out, how it lays out. But if anybody remembers, it was probably 13 and 14 when I was first getting started in mortgage, we had home affordable refinance program. And some people were underwater, and for that reason, they couldn't refinance. So what HARP did is allowed me as a lender to say, is your loan backed by Fannie or Freddie? And a large percentage of them, 75, 80%, or maybe even more, are backed by Fannie or Freddie. If they were, I could refinance somebody in a $400,000 mortgage that was only worth $360,000. It was a streamlined process. It was super beneficial. It helped a lot of people stay in their homes. This is going to help people, if done correctly, who cannot qualify for one reason or another, low income, low credit, whatever it is, refinance, save some money, stay in their homes. So I'll go over some of the verbiage. What I will say is this, is planned to be rolled out this summer. It's not out yet. It's not something you qualify for yet, but we'll get into it. And then it's going to be called Refi Now program. So look for more stuff from me. Look for more stuff from a ton of people, I'm sure, over the next few months and as early as this summer. Hope to be implementing this program and having options to help a bunch of people. So it's going to be targeted towards low income and lower credit score borrowers. I don't want to skip ahead, but it's like 620 credit score and above, and then 80% of the area median income and below that's going to qualify for this. And I'll pop over real quick. We went over this in a different video of mine. 86,700 in the zip code where I'm at. If we take 86,700, you're going to have to show that your annual income is 69,360 or below to qualify for this program. The other thing that you're going to have to show is that your mortgage is backed by Fannie or Freddie. Like I said, a vast majority of them are. And I remember this from my days of doing a bunch of HARP refinances. You just go and if you look up Fannie Mae lookup tool, Freddie Mac lookup tool, those are the two lookup tools. If it's not owned by one, you search it in the other. And it's super, super easy. First name, last name, street address, last four of your social. I typed in all this information on a property my wife and I own. This is not our primary home, so don't come knocking looking for me. I'm not here. But it just comes up like this, match found. This means that you may be eligible for certain Fannie Mae only mortgage relief options. Then you go to the loan lookup tool for Freddie Mac. Similar stuff, house number, street name, city, last four of your social, boom, you submit it. No, our records show that Freddie Mac is not the owner of your mortgage. So it's just that easy. And really, if you think you qualify and this thing has been rolled out and you know that it's been implemented, you call a lender and you give them this information. Like I did when I was doing all those HARP loans, I just talk to somebody and say, what's your street address? What's the last four of your social and your name? I'm able to look you up. Okay, owned by Fannie or Freddie. How much do you make per year? $51,285. Cool. Where do you think your credit's at? About here? You may qualify for this program. Let's proceed, right? And so lenders must ensure that the borrower is saving at least $50 a month. So it's going to be like a cost benefit thing where you've got to benefit a certain amount. and drop the interest rate by at least 50 basis points, which is a half of a point, right? So if you're in a 3.5, we got to take you down to a 3. If you're paying $1,550 a month, we got to take you to at least $1,500. I like those things that are built into some of these programs where like you've got to have significant benefit to refinance, meaning you couldn't refinance into something that's not going to help you. And so that's a good thing to just protect consumers, right? It's going to require that lenders provide a credit for the appraisal. So you're not going to be paying for an appraisal. What it's probably going to look like is there's just going to be no out of pocket for the consumer. These consumers that need it the most are going to have a great program available to them if they qualify based on these factors. They've got to save $50 a month. They've got to have the interest rate go down by half a point. No appraisal. If there's other costs, it'll likely be rolled into the new loan. Look forward to implementing Fannie Mae's new Refi Now option as soon as possible to ensure all eligible homeowners are able to avail themselves of this money-saving opportunity. That's Fannie Mae's CEO that said that. Another cool part is last October, we know that 50 basis point adverse market refinance fee was implemented, where refinances just got a little bit more expensive. It's kind of a, I don't know, controversial, right? On this fee being implemented. But if your mortgage balance is less than $300,000, that fee does not exist. And so it's going to make the rate even better for you on your refinance. And so that's another good thing of it. It just says it can save borrowers between $100 and $250 a month. This depends on what you're currently at, what you're currently paying. So everyone's going to save different depending on the starting point, right? If you're in a 5.25, you're going to save a lot more than somebody who's in a 4%, but it's going to open it up to more people. And I'll get into that because it's going to say it right here. And Mark Calabria from FHFA, we saw a spike in refinances, but 2 million low-income families didn't or couldn't take advantage because they didn't qualify, right? And so this is designed to help them save between $1,200 and $3,000 a year on their mortgage payment. And like I said in the beginning, the people that need it the most. Okay, so let's get into qualifying. I skimmed through it and kind of mentioned it briefly, but beyond owning a GSA-backed mortgage, which is Fannie or Freddie, and like I said, these lookup tools will tell you. I'll put these lookup tools in the description so you can use them. And you must have an income below 80% of the area median income. I'll put that lookup tool, AMI lookup tool from Fannie Mae, in the description as well. Besides that stuff, you have to have current on-time payments for the past 6 months. And so I'm guessing if somebody's in forbearance, they're going to have to come out of forbearance and pay 6 payments. This program, if implemented, is not going to go away 2 months later. So if you're in forbearance, I wouldn't sweat it. I would just know that if this is something that you'd be eligible for and it's attractive and it's going to save you a bunch of money, it would be a reason why you would want to call up and say, I'd like to exit forbearance and start paying my monthly payments again. Because then once you make 6 of those payments, you're going to be eligible for this. Also, not have a mortgage with an LTV ratio greater than 97%, meaning your house is worth 300. You can't have a balance more than 291. It's got to be 97% or lower loan to value ratio, and the debt to income no higher than 65. Now this is huge, and this is how it helps somebody with low income. I'm sorry that you're in the position that you would have a debt to income ratio that high, but the good news is if you do, you certainly need this help, right? And just for context, for anybody who doesn't know what debt to income means, if you make $4,000 a month, 65% of $4,000 is $2,600. So you've got a $2,000 mortgage, $300 car payment, $200 in student loans, $100 in credit cards. All that adds up to $2,600. That's a 65% debt to income ratio. And so maybe all those other debts are true and your mortgage is $2,150. Well, we're going to lower it to $1,950 by, lowering your interest rate. That's a loan that would not even been close to qualifying. This debt to income ratio for a lot of buyers it's got to be under 50, and for some buyers under 45. They're stretching it up to 65, meaning less income to qualify for it. That's something that's going to help. As soon as possible with a tentative date this summer. So I think all in all, it's something it's a really good thing. It's going to help people that truly need it. We'll see how soon they can get it out, how streamlined of a product they make it, depending on, it looks like there's a DTI requirement. So they're going to require income docs. They're going to require credit report and credit minimum of 620. So it looks like a standard type refi with a few little caveats, right? Where we get a little bit more flexible in that debt to income ratio. So in closing, racial and income disparities in refinance take-up rates have persisted for far too long. With this initiative, we strive to narrow the gap. Sheila Bair, chairwoman of Fannie Mae's board, said in a statement, "We thank FHFA for its strong leadership to help all eligible homeowners reduce their monthly housing costs by taking advantage of the historically low mortgage interest rates. More people that need it will be eligible." That's it. Period. The end. Hope you found this helpful. If you've made it this far, consider subscribing. Know that when this becomes an actual loan product available, I will be providing updates. So if you're not subscribed, subscribe to the channel. I appreciate you watching. Until next time.